Right, I'm good whenever you guys are good. Hey, what's up, everybody? Welcome to Trade Like Nick. I want to welcome you guys on my journey to teach you, but more importantly, to show you how to trade the markets consistently and mathematically so that you have an edge instead of the other way around. Because the sad reality is that the majority of traders are not trading, they're actually gambling because the statistics prove that 95% of people who try to trade the markets on their own will fail, lose, and give up. My goal is to help you be the 10% that actually succeed and give you a step by step roadmap so that you know exactly what it takes to be consistently profitable using a mathematical edge, not gut feeling, not fundamental technical analysis, but actually having a mathematical edge. Because in the end, that's all trading is trading with an edge, just like the casinos, just like insurance companies. It's not a coincidence that the wealthiest companies in the world are casinos and insurance. If you look at all the skylines in San Francisco, in New York, in Chicago, those tall, big buildings, those are all insurance companies. If you look at Vegas, all those big casinos are profitable, billions of dollars. Why? Because they're trading the math, they're trading the probabilities, and they let the math play out. So, the reason why most people fail at trading is not because it's rocket science. It's because there's so much information out there that it's hard to consume it and to make any sense out of it. My goal is to make the math make sense. Because if the math doesn't make sense, it doesn't make dollars. Get it? Cents, dollars? All right. So, why I feel like I can give you that clear roadmap is because my journey over the last 20 years was the blueprint. I went through the highs, the lows, quitting. I quit trading twice because I wasn't able to figure out what it was that was holding me back. It wasn't until I started learning the secret side of trading, which is trading the probabilities. When I intersected my teaching, I'm a math teacher. I've been teaching high school math for 15 years. And then I combined it with trading. And this year, I actually taught my students here at Cal Hills in Milpitas how to use math to trade like the casinos, where they have the probabilities on their side, not the other way around. So, my goal is to not only give you the blueprint, but actually be there and show you that the blueprint works. So, the biggest one of the biggest motivations for me to start this channel, and I welcome you guys to join me, is because 95% of people out there on YouTube, they're just grifters. They're just selling courses, but they don't actually show you the money that they make. So my challenge is to actually show you with a small account, starting with as little as $3,000. I'm going to show you how to generate $150 every day from that account. And if you can do that and you can do it over 3 months consistently, you could actually double a $3,000 account to $6,000. And that's through the power of compound interest, right? You guys have heard of compound interest. This is when you have your bank account, right? And most bank accounts, if you think about it, most accounts go up very slowly. Whoops, you can't even see that. Hold on one second. And you cannot get rich with simple interest. The only way you can actually get wealthy is through exponential growth. And this is the power of compounding and the power of math. And I'm going to show you how you can double your money and how you could potentially trade for a living, because the ultimate goal is not to buy, hold. As a trader, the ultimate goal is to figure out how we can retire early and how we can actually have our money work for us, right? So let me give you a quick example. What if I told you that you could retire in less than 1 year? What if I gave you a 12-month roadmap that would allow you to retire and quit your job? Do you think that's even possible? I think this is so important because in the age of AI, a lot of jobs are not going to be available to the people out there just graduating, right? And so all these low level jobs that typically people hire students fresh out of college, they're not going to be available because you could just hire an agent, an AI agent, to do all these mundane tasks. So you need to equip yourself with the knowledge, very specialized knowledge that very few people know, right? This is the secret that Wall Street knows, what the math proves out, and nobody teaches it to anybody. So, me as a teacher, I want to teach you guys. All right. So, how do we retire? First of all, in anything you do, you need to begin with the goal. If you don't begin with the end in mind, then you don't have a roadmap and you won't know how to get there. You don't know what are the different milestones. So let me show you. To retire, all you need to do, what if I told you that all you needed was to have $50,000 in your account? Can you retire with $50,000? What do you guys think? Anybody here? Raise your hand or leave a chat. Can you retire in Silicon Valley with only $50,000? I'm going to show you how. You know how? Through the power of compound interest, but not over years, but over months. Because think about it. If I could show you how you could generate, let's say, 10% per month, do you think you would want to learn a strategy that can compound 10% every month? Because 10% of $50,000 is $5,000. In the Bay Area, you probably will need at least $10,000 a month, right? Because here is the key to financial freedom. The key to financial freedom is when your passive income, which is money that your own money is generating, is greater than your monthly expenses. Would you agree? Right? So let's say your monthly expenses with your mortgage, your childcare is $10,000. Well, if you have some money in some trading account that can generate over $10,000, you now have escaped the rat race, right? Your passive income is now greater than your monthly expenses. And this is the key to getting out of the rat race, right? So first, you need to know how much is your monthly expenses. If it's only $5,000, then if you could generate $5,000 or more in a trading account or renting out your house to cover your mortgages, as long as this is greater than that, you have now reached financial freedom. So, my goal is to teach you how you could generate 10% a month. So, a lot of people say, Nick, 10% per month, that's ridiculous. Well, let me show you how it's possible. Do you guys want to see how this is possible? Raise your hand if you're in the chat. Let me know if you think it's possible to make 10% a month. Well, first of all, let's do this. What is 10% of $10,000? You just take away 0, right? This is what I teach my math students. Divide by 10. That is $1,000 a month. That might seem a little unrealistic to generate $1,000 a month off of a $10,000 account. But let's break this down even simpler. What if I told you per week, divide this by 4? That's $250 per week. Does that sound a little bit more attainable? Yeah, right? I could generate $250 a week. Well, let's do this by day. Divide this by 5, and you're going to get $50 a day. Do you think I could generate $50 a day with a $10,000 account? This is very reasonable. It's not something that is unreasonable. And I'm going to show you how. All right. So check this out. The challenge for me is to show you the roadmap so that you can actually do this yourself and not just rely on a job. So this is your shortcut to accelerating your wealth. And the holy grail to trading is keeping it simple. Simplicity. KISS. Keep it simple, stupid. Because if you do not keep it simple, you're going to always get off the path. The more decisions you have to make, especially the mental decisions, the more likely you won't have the discipline to actually follow through, because trading is all about being disciplined and following your rules. It is trusting the math and not your own emotions, because believe it or not, relying on your emotion will cause you to actually do the opposite of what you should do. Why do you think algorithms are so successful, right? Algorithms have no emotion. They just see the math, the data, and then they're going to trade the data. So here's your complete roadmap. Let's get started. You guys ready? You guys excited? Let me know if you're excited in the chat. All right. So this is how you guys are going to evaluate trades. Now that you know kind of like the big picture of what it takes, now let's see it in action. So today, what I'm going to show you is how to trade the market. When I talk about the market, I'm talking about the S&P 500, folks. This is the most liquid, most highly traded instrument in the whole world based on stock market indexes. We all know that the stock market has been going up, and we're at all-time highs right here, 7,400. Look at this. If I were to show you the stock of the S&P 500. Look at this. What do you notice? This is the graph of the S&P 500 since 1929. And what you'll notice is this graph is growing at an exponential rate, right? This is kind of like compound interest, because with technology boom, we went and skyrocketed. We thought we couldn't go higher. Then we had the AI boom. And then now look at where we're at. See this big red candle? This was COVID. Each one of these candlesticks, see this candlestick on my hat? Each one of these candlesticks represents one full year. So this year, COVID, the market dropped from 4,800 all the way down to 3,500. But guess what? We recovered, and now we're going all the way back up, right? And so this is how we're going to generate our wealth, is to help predict, using patterns to predict what's going to happen in the future, and then use probabilities to build trades. So this is what we're going to do. We look at a bigger picture. This is called multiple time frame analysis. Then we're going to look at a weekly chart, right? So this is what the chart looks like on a weekly basis. Each one of these candlesticks represents a week. And The reason why we look at charts is because looking at a stock chart is like looking at the footprints of money, right? We can look back in the past and see patterns. Do you guys see any type of patterns going on in here? Right? If you can identify patterns, we use patterns to then make predictions, right? So if I were to say, you know what, the market's gone really high up here, and now I want to see if I can predict what's going to happen on a shorter time frame. So now the shortest time frame is actually the daily time frame. And this is what's going on intraday from the market open at 6:30 Pacific Standard Time, and this market is going to close in the next 30 minutes. Do you guys see a pattern that happened intraday? Look at this pattern. Do you see this level right here? This is 7,340. This level is an example of how you actually look at price patterns to predict. Because if we look here, see this level right here at 73.40. Well, the next time it reached down there was about 9.50. What proceeded to happen was the stock went all the way up. Now we're at 73, almost 7,400. I actually placed a trade that made money from this movement earlier in the day. You guys want to take a look? So I'm going to show you how you could day trade the S&P 500 and how you can use as little as $25 and make a bet that says, if this thing goes all the way up to 7,400, I'm going to make money. Look at this. This is my monitor tab. You'll see I'm up $143 today, up 144. And what did I do? All I did was I placed two different orders, and I'll show you what I placed. This trade right here, I did what's called a bull call spread, which means I bet that it was going to go up from 735 to 738. Watch. I'm going to go and create the duplicate trade. And this is the trade. I got in for 80 cents. What did I do? I bet this is what most people have no idea occurs in the market. See this index? This is the S&P 500. This is the spiders. You guys all heard of the spiders, right? It's an ETF that tracks the S&P 500, the 500 biggest companies in the United States. Well, instead of buying a share, right, if I wanted to buy one share of this ETF, I would have to go in and click on the ask price right here. So watch, if I click on it, it cost me $737. Watch. I'm going to buy one share, right? If I buy 10 shares at $737, guess how much that would cost me? That would cost me $7,378, right? Because I'm buying 10 shares of these. So I got to move the decimal over one. But what if I wanted to pay a lot less because I want to make a bet today of what's going to happen? Well, see these things down here? This is called an option chain. This are all different bets that have different expirations. So if I bet 0, that means this bet is going to expire at the end of the day, which is 25 minutes. So look at these bets. It's going from 34 cents, 12 cents. But an option, you have to multiply it by 100. It has 100 multiplier because when you trade options, so watch, if I buy this option for 36 cents, if I click confirm and send, it actually cost me $36. See that? Your max loss is $36. Why? Because you have to multiply this number times 100 shares, because an option contract is a bet that won on 100 shares. So if this bet here, 738, let's place a bet real quick. I think that the market is going to end at the high. Okay. Let's say I think that the market is going to go all the way up to 738. So watch. If I want to go 738, I can click this one contract. It's going to cost me 35 bucks. I'm in at 35 cents, but that actually cost me $35, right? See $35. So if this thing goes up to 730. Right, that trade that I just placed right here, I bought the 738, meaning I just made a bet that this thing is going to get up to $738 right here. Right? If the market gets above this price, $738 in the next 25 minutes, I'm going to win money on this bet. And I'm going to win. Here, let me create what's called a bull call spread for you guys. This is a little more advanced. This is kind of a glimpse of what you're going to see me do in the live trade. I'm going to buy the 737 and then I'm going to sell the 738. Watch, it only cost me 61 cents. So watch, the max I can lose is $63, right? That's how much I paid for it. My max profit is 37. Oh, this is because I sold the 7, buy, sell, 60 cents, 40. Yep. So watch, if I click send, this is what most people have no idea. They didn't know. Did you know you could trade and bet on the spiders and it only cost you $63 to make $37? And all it has to do, even though you're risking more to make less, the probability is high because all you need is for the stock to close. Here's the break-even stock price, 737.63, right? It has to close above $737 because this is the strike price. I bought the 737 strike price. I paid 63 cents for it. That's why it has to go up 63 cents for it to break even. So if I send it through, I'm filled. All right. So watch. All I'm doing here is right now I'm up 162 from the open, and I have 3 different trades, and these are all trading this right here, the S&P 500, either the ETF, right? If you have a small account, but if you want to go big, you can actually trade the S&P 500, right? It's the exact same chart, right? But the multiplier, this product is 7,398. This is a lot bigger. So you guys want to see something? I'm going to show you guys something that might blow your mind. In order to make money trading, you need to think like a market maker. Did you guys know that 99% of people who try to trade, day trade the market, day trading options, 99% lose money, meaning the retail money, me and you, we're considered retail. We're the retail traders. The big institutions, the big fish, the quote unquote smart money, those are the wealthy. And the market, honestly, is just a transfer from retail money to the wealthy. But if you know how to think like the wealthy do, right? Insurance companies, casinos. Look at this. See how it says 773.40? I could have predicted that this was going to bounce there. Do you know how? By looking behind the scenes, by looking at not just the price action of what's going on, but by actually looking at volume. Right here, this is the S&P 500, and this was a snapshot that was taken at 10 a.m. Eastern Standard Time. Do you see that? See this snapshot right here? It's Eastern Standard Time, and this was taken at 10 in the morning, which is 7 o'clock Pacific Standard Time. Notice the price of the S&P 500 at that time was 7,388, right? And what you'll notice is this. This is how you think like the market maker. You'll notice this is the calls. This is if you think it's going to go up. This is the strike prices. This is the price that you think. These are all different bets. This, the puts, is if you think it's going to go down. And you'll notice this is a very key point here that you don't need to understand it now, but it's very easy. 73.50. See that? See how it had the most volume? 7,600 contracts were traded on the 73.50 puts. So by knowing this, look at what we can do. Why do you think I got into a trade right here. See how it went to 73.40, 73.50? The market gravitated. It opened up here and it gravitated towards the 73.50 strike, which is right here. This is the 73.50 right here, right? The market gravitated towards it and then it bounced off of it before going higher. And now look at where we are. We are near 4,000. You want to look at my position right now? Look at how much money I made on that trade that I just placed, right? We're up 179. See this trade, the 61 cents we paid for this option? Watch. If I go create opposite order, watch. It's now worth 65 cents. I just made $4 on that trade. See, this tick now I made, see, it's going up and up. Why is it going up? Because look at the price of the S&P 500. It's going higher and higher, right? This is what trading is all about. It's about recognizing patterns, right? Look at this pattern here. You see this pattern? Every time we see a break above resistance, this right here is just an intraday pattern of what's going on. And a pattern is nothing more than the psychology of traders. Hey, what's up, Tracy? How you doing? You want to hop in my live stream? Say what's up to my audience. Hey, you guys. Hey, come up here. Come up here. All right. So this is one of my students here. I'm going to teach her how to trade. I teach all my students how to trade. This is Tracy here. Say what's up.
Wait,
Yep.
Wait, where's the camera?
Right there, right here.
Oh, so I can't see myself?
No, you can see yourself, but you just got to look that way.
That's weird.
I know. So I teach my students here how to use patterns to actually here. See, look, you go in there. How to use these patterns here that you see up there. All right. So now look, it's breaking through. So, yep. So look at this. Once it broke through this resistance, notice it proceeded to go all the way up here and then it pulled back. But what you'll notice as a pattern reader is that when it breaks through resistance, the next time it comes back down to that same area, demand kicks in and it causes the price to go even higher. Right now, look, this is basic market structure here. Once it breaks through this resistance, it proceeds to go higher and then it pulled back. And now it's looking to break higher through this next level of resistance right here. See that? So watch it break through. And not only that, but if I think like a market maker, I can actually show you, look at this. The highest volume on the call side, people were betting that it was going to get up to 74.15. 74.15. That is where actually you could even see 7,400. See that? 7,400, 6,200 contracts were traded at 7,400. That is where we are very close to right now, right? So if you look here, if I go to the SPX, because the spider is just the ETF of the SPX. Look at this. We went all the way down and now we're going all the way back up. We're getting very close to filling the gap. The awesome thing about trading is intraday trading is you don't have to worry about gaps. See how it gapped from yesterday's close to this morning's open? This big gap occurs because what's happening overnight gets reflected in the price when the market opens. But when you're actually trading the market intraday, there are no gaps because it's being traded right now. And so look at this. We're approaching 7,400 right there. And that was predicted by looking and analyzing the market through the market maker's lens, right? This was at 10 o'clock. They predicted, they show you where retail traders are selling and buying contracts, and you can use this information as a market maker, as a retail trader, and say, okay, well, if I know where the actual retail traders are positioning themselves, I can build a high probability trade. Watch, let me show you how to build a trade here. Let's say I think it's going to end at 7,400. Watch. I'm going to go into the 7,400. I can sell this bet. I'm going to sell this bet. And then I'm going to buy this bet. and then I'm going to buy this bet as a hedge. This is what's called an iron fly. I'm going to get 350 credit for this. Watch. Let's see if it gets filled. Right now it's working. See how it's working right now at 345? Boom, I'm filled. I'm filled at 355. This means that I'm betting that it's going to close anywhere between. So this is a more advanced strategy. So here, let me show you what I did. 355 credit, right? Look at this trade. This trade has two break evens. If you know options, look at this. Your break even price is actually in between 73.9645 and 74.03. If it lands anywhere in between these two strikes, I'm going to be profitable. 73.96. Let's just put that on the map. 73.96, 74.03. So watch. I'm going to go here on my chart, and I'm going to say 74.03 is my break even right here. And then on the downside, my break even is at 73.96 right here. So if I can catch this inside of this butterfly, I'm going to win money. All right. This is called trading probability. So what did I do? I sold the 7,400, right? That's the one that I sold. And if we go here, you'll see I sold it here and I sold it here. I sold the call and the put. And then I went out and bought the 74.05, 73.95. What does that mean? I bought the 74.05, which is way up here. And my break even is what I received as a credit. How much did I receive for this? 355. So my break even is 74.0355. So if I want to make it precise, my break even is actually 74.0355 because I add the credit. Okay, let's put a red since that's the top side. And then my break even on the downside is, oh, look at that. Look at that big upswing, right? So watch. This is the calculation. 7,400 plus minus my credit of $3.55 equals 73.9645. 73.96. Here, let me just change this to 45. And let's make this green since this is my downside. And so here's the bet. This is the bet, folks. You guys can watch it with me as we trade together and see, right? So you can see my position so far today. I've had how many orders still? 1 order, 2 orders, 3, 4, 5 orders. This is the time. I traded at 10:42, 10:55, 12:39, 12:47, right? 4 trades. And I'm up about 200. Look at that. Profit loss for the open, I'm up 214, 216 for the day, 202, right? Remember, I'm just trying to generate $150 every day with a smaller account. All right, so let's see what's going on here. What we have 10 more minutes until this game ends. We'll stick around all the way till 1 o'clock. All right. So we're going to stick around and then you'll see how we make money and lose money because trading is not all about winners. It's how much do you make when you win versus how much do you lose when you lose. So right now I'm up 196, 172. I'm trading the SPY 0 days to expiration, and I'm trading the SPX 0 days to expiration. Remember this trade that I bought for 61 cents? Look at it. If I go opposite order, look at how much it's trading for right now. 88 cents. I just made $27 off of that trade. Now it's worth 90 cents because the market is going higher and higher, right? This is how you can actually bet the market instead of betting on sports that where you have a negative edge or a negative expectancy. You can actually trade the stock market, and the edges are on your side if you know how to do it strategically, right? So here, let's see here. So we want this thing to get below, but I capped my risk. This is called defined risk trading because I created a trade that says, okay, if it gets above a certain level, I'm only going to lose a certain amount. It's already capped. That's why, even though this market is going away, right? Because I want it to get in between 70. Whoops. I'm trading the SPX. My bad. I'm trading. Yes. Wow. Look at that market. It's going higher and higher. Look at that. This market is just ripping higher, right? Look at that. It went as low as 73.40. We went 60 points. Now look, it's going all the way up to 74.10. This is a crazy market, right? I'm making more money on my other trades. So when you're trading, look at this. Even though I was wrong directionally, right? Because I thought it was going to close near 7,400, my overall portfolio is still up 186. Why? Because, right, I'm down on that one trade, but I was up 300 on my other trades. See, these other trades are here. I'm up in that one. I'm down on this one, but the net is still up 182, 158 for the day. So as long as, and I still have a chance for this thing to come back down. Let's see if this comes back down to 7,400. If it does, that would pay off nicely. So let's, oh, look at that big drop. Look at that. Now we just got to have it drop another what? There we go. Now look at my profit loss statement. See, now I'm only down 47. I'm up $213 now, right? Remember, I was down way more than that earlier, 100 and something. Let me pull it up here, and you can actually see. Look at this. So we have what? 5 more minutes. I want this thing to come down to 7,400. Boom, look at that. Now look at my profit. 80, 160. Oh, hold on. Oh, there's my bell. That's not the bell for the market. That's just the bell for my class. All right, now it's coming back down. Let's see where it goes. It's kind of like watching a basketball game, right? This is the 2-minute warning. Because if you look at the market, you got to think of it like a game. Every game has a probability based on the trade. Notice here, see this probabilities right here? Probability, this tells you the probability of you winning or losing on this trade. Look at this, 14% probability of in the money, 85% that you're going to lose, right? These probabilities always add up to 100 because when you understand how probabilities work, and what's called the normal distribution curve, which is just the bell curve, everything has a probability being attached to it. And these probabilities are live, just like a sporting event, right? You know, when the 49ers score a touchdown, the probability of them winning just went up by a certain percentage. Ooh, look at that. We have what, 3 minutes and 50 seconds left in this game. And my bet is that it's going to go in between here and here. If it does, I get paid. If it doesn't, then I just lose that bet. So let's see what's going on here. Let's see if it wants to get inside of this range. And we got the 3-minute warning. 3-minute warning. And this is my goal, folks. If you guys want to learn how I trade, how I use math as my edge, I welcome you guys to come join me on this journey because I really do believe that I can help you guys reach whatever financial goals you guys have. And I'm not going to be here telling you, oh, buy this, buy that. No, I'm going to tell you how to look at the markets, how to position yourself using strategic, mathematically based principles to generate money like a casino, like an insurance company, selling. And look at this pressure here. We're getting below 7,400 and we have 2 minutes left here. Let's take a look. Let me watch. Let's see how the market ends. There we go, folks. It's like watching a live game. All right. And then here for my students, I showed them that I was going to place the trade, and now they're coming in to see where the trade is doing. So check this out, Alan. Remember, we looked at this trade. Look, I'm up $226. See that? 226. We went in there and I showed you guys the trade. What do? We did this one, 80 cents. No, which one? Yeah, 80 cents, right? Oh, it's 26. So look, see how this is 26? Watch. I'm gonna do the opposite. This is how much it's going for now. Watch. Oh no, that one lost. What did we bet that? Yeah, we bet it was gonna go down. So that trade, look at it. See, remember when we looked at it, it was way down here, right? Remember it bounced off of this level right here? Now look at what the market did. It went all the way up this way. But look, remember we placed the trade? Look at this. Remember I said, oh, look, if it goes up, I'm going to trade. Look, 80 cents. Now watch. This trade that I placed for 80 cents is now worth $2.84. So I just made 200 bucks on that trade. Because remember, I told you all you needed was a 5-to-1 risk to reward ratio, right? This one made way more than 5-to-1. This thing, actually, no, we paid 80 cents. It's worth 280. So that's about 3-to-1. We just made a 3-to-1 reward to risk on that trade. Cool, right? So that's how you use math right here. So look at that. We're making 196. Ooh, 307 now. Look at that. You know why? Because look, 40 cents. We're getting in between. Let's see here. Look at that. See that big drop? Okay. I'm trying to catch it. Oops. SPX. I'm trying to catch it right here. Look at that. Look at that, folks. Perfect. Look at that. I trying to catch it right in there. Look at that. It closed right inside that 7,400. That's almost like perfect. Look at that. It went way up here, but now look, it's right there at 7,400. If it gets lower to this blue line, I'm going to make even more money. 2 seconds. Boom. Watch. Look at that. It closed right at 7,400, folks. Look at that. How much money did I make on that prediction? 7,400. I made 443 bucks. Look at that. You just saw it. Remember that trade, that SPX trade? I made 222 bucks off of that trade. I made 183 off the spiders. So look, this Iron Condor, this right here, this trade, what did I do? I sold it for 355. Watch. I sold it for 355 and now it's worth only $1.30. So you can make money when you sell something for high. And you saw me, I called it right at 7,400. How did I know that? Remember, I pulled up my think like the market maker. Remember how you got to think like, you got to think how the market makers think. Remember, we took a look and we said, all right, 7,400. We looked at this strike right here and we said on the call side, 7,400, there was a lot of activity at 7,400. And that's exactly where it ended up closing at, right? Way up here, this is way too high. You don't have to worry about that one. That was way above. But this one was where the retailers and where the market eventually closed. So that is a brief session on what I'm going to be doing with you guys. I'm glad you guys were able to watch it live on day one. And you saw how I was able to predict, right, where the market was going to close. I built a trade that said as long as it catches in between 74.03 and 73.96, as long as it closed in between there, I would make money. And what did it do? It closed in between this range. And how much money did I make? I made $222, right? How much did I risk? Well, the risk on this trade was only $145. I risked 145 to make 222. That's more than 100% return on my money. And I made 295 total for the day. And we are done. The market, the game is over. The options expire. These trades right here, see 0 days to expiration. Look, they're all zeroed out now. See these bets earlier, watch. This one that expires tomorrow. See how there's 1 day? This 1 day means it expires tomorrow. See how these prices are all changing? 1160, 1130. Well, guess what? Today, if you look at today, they're all zero now. Zero. 5 cents because the game is over, right? This game expires today. This game, there's either a winner or a loser, depending on what bet or what strike price you decided to buy or decided to sell. And each one of these has a probability, right? See, 99%, you're not going to win. The market's already closed, right? It's already closed out. Everybody who had these bets won money. This is how much money you win. Anybody that bet over here, this is how much money you won. Anybody that bet over here, this is the losers. Anybody that bet over here, you lost. And that's all this game is about. This game of trading is all about how much do you make based on probability, right? You find the trade. I showed you how to find the trade. You select a strategy. Most people only know how to buy stock. What if I told you you could actually build strategies based on math? If you're bullish outlook, if you have a bearish outlook, or even if you're neutral. Earlier, I just showed you a neutral outlook, right? I said, oh, I think it's going to go sideways or catch in between here. That was more of a neutral outlook. Then you got to build the trade. How do you build the trade? I showed you earlier, right? You go in there, you click, you could just right click, buy, right? And then you could just build the trade right from your chart. Once you build the trade, then you got to execute the trade. You got to, or when you're building it, you got to make sure that you manage your risk, determine your position size, and make sure that your risk to reward ratio is aligned. And then the last part is executing the trade. How did we execute it? We put it in the trading platform, and then we just click confirm and send, and then we execute the trade, right? That's it. It's just like a game. And then the last part is tracking the trade and evaluating the trade. And so that's what I did, right? I tracked the trade by looking at my position right here, right? This is my trades. I track it by looking at how much I paid for them and how much I got out. And then the last part is then journaling it. And you always want to put in your trades in a trading journal. You got to treat trading like a business with income for your winning trades and expenses for your losing trades. Any profitable trading system, you need to account for losing trades. This is where most traders go wrong because they don't want to be wrong. So they let their ego and their emotions get in the way, and then that blows up their account. So you got to make sure you evaluate looking at your performance adherence metrics, and then you walking through a complete trade. I just walked you through a complete trade. And this is what I plan to do trade after trade after trade, day after day for the next 90 days. My trading journey is to walk you through trading from beginning to end using my charts, thinking like a market maker, and then giving you the exact blueprint. 1, step 2, step 3, step 4, step 5, and then you just repeat. Once you learn how to trade systematically, strategically, and statistically, then you'll realize that math and wealth is nothing more than an equation. Because if you think of math as an equation and you understand the power of compound interest, then you just put in the formula and the compound interest engine, it's going to do the majority of the work. You just got to know how to position yourself to leverage options, not just stock, but how do you leverage it with option strategies where you have a win rate, right? Remember, you could be right 80% of the time, lose 20% of the time. But if your average winners outpace your losers, then over 10 trades, you're going to create what's called a positive expected value per trade. Remember, I taught you about that positive expected value. And then you can then have a true edge by selling strategies because once you understand how to recognize patterns to make predictions and actually get a statistical edge, then you can build a profitable trading system, whether it's daily, trading 0 days to expiration, or you could do monthly, because these bets, you can bet either 0 days or you could do monthly. See, there's 30 days. So you want to do bets that have longer expiration, the game lasts longer, you can get paid. See, now they're $126 for the bet because you have more time. And so math is just your wealth blueprint. You master the foundation, you develop your system, you execute it with discipline, and then you compound relentlessly. This is how you can generate 10% return a month, turning $5,000 to $100,000 in less than 3 years using math, money, and the markets. So, everybody, I want to welcome you guys. If you guys want to help support me on this journey, feel free to spread the word, subscribe, smash that like button, do all that stuff, and spread the word, because I'm here to help democratize trading. Because in the world of AI and the future of uncertainty, you need to invest in yourself, invest the knowledge that it takes to profit from the markets. And so that's my challenge to you, is to get on board. I don't care if you use me, watch other people, but there's so many fake finfluencers out there that are just not being transparent with their trading. I'm here to break that wall down. I'm all about transparency. I'm all about showing you winning trades. I'm here to show you losing trades, right? Today I had a losing trade, right? Today I bought this call spread. No, I bought this put spread earlier in the day. I thought it was going to go down. I bought this put spread and I lost 26 bucks, but it's okay, because even though I lost 26 bucks on this, I made 200 on this one. I made, I think, another 100 on this one, and I made another 300 on this one. And so in the end, even though I lost on one, I won on the other four, and I was still net profit $279 for the day. So that is it, folks. I will see you guys at the same time tomorrow, 12:15 Pacific Standard Time. We're going to trade the last 45 minutes together and see how we can grow this money and try to have a target of at least $150 per day. That's my goal, is to show it to you, and then I'll teach it to you along the journey. All right, folks, I'll see you in the next video. Peace.